October 28th at 8:03. Happy Friday. Just quickly, I wanted to go over Southwestern Energy in the oil and gas exploration industry, ranked amongst the top industries still. If you look at MarketSmith here, they have earnings per share rating of 93. The group as a whole has remained as strong as any group as the market has continued to experience weakness here in a bearish trend. If you look through their earnings, as I've mentioned before, you see excellent growth here. Yesterday they came out with most recent earnings, and if we just pull them up and go over it quickly, right now they reported 32 cents in place of 24 cents, 4.5 billion top line compared to an estimate of 1.6, so they exceeded by 3 billion. Instead of coming out with 1.6, they came with 4.5. I guess that would be a couple 100%. And if you go quarter over quarter here, you're at 15 billion annual sales versus market cap 7 billion. So it's a 50% discount to 1 times their annual revenue or sales. If you go through the industry, and again, this is a top-ranked industry with a lot of big names that are up big compared to Southwestern Energy. So strength, and I don't see OPEC turning around and saying, oh, we're going to decelerate our cuts to production. They wanted expansion. They wanted them to increase, and they got the opposite, if my memory serves me correctly, at the most recent meeting. So the bottom line is they've already been growing, and this is due to acquisition. So if you go through here, on this chart, should it hold this 200-day, you see it reverse back through this 733 pivot, and then I believe it retests this 8. Once it consolidates in this 850, you get a little head fake as if it's going to break right out immediately, and it doesn't, and then consolidates again similar, and then goes on to retest here or close to there, maybe only 9. But either way, if you go back, these shares were much higher, and at that time the company was much smaller. With these 3 acquisitions, they increased their capacity tremendously, and they're strategic acquisitions. One's in Haynesville, which is known as the hottest, or thought to be the hottest area in U.S. I guess whether it be margin or maybe not pound for pound, it is profitability-wise, or they see the growth. But you could double check back into that. I just know it was a huge acquisition. All 3 of them were Montage Resources they acquired. But if you go back through here on the weekly, you see kind of here every time it tests here, it doesn't work its way back. It kind of rockets its way back. And this doesn't look like much of a move, but from 587 to 734, I mean, that's 25-30% swing. So I don't see how return on equity 55%, and the debt here, I mentioned yesterday, I would check into that. It's not because that's not calculating in the 1 billion they've already paid down, half the price, if not more than that. They financed 2 billion. They should have it down to just 1 billion or less. And as you can see, as a percentage, that would mean they have 15 billion in debts because their market cap 7 point. Even if that were true, with the market cap where it is right now, and the sales that they have, it surely wouldn't be that ratio. And again, that might just be the computer error. I'm sure it is. They have them ranked so high here, 93, 97. But you have a nice trend going, and I believe you're going to see a pivot to at least test the upper end of this range in the 8 to 850 range here, pivoting off this report. It's an awesome report. Thanks.